Welcome back to Bazaar Corporate Radar. Let's now put the focus on the renewable and green energy sector. According to a Nirmal Bang report, private capex announcement in the sector is above the pre-pandemic levels in FY23 between April and November period, and a major portion of this capex has been planned towards renewable energy. To discuss the outlook on the energy space, what's the roadmap for India Inc. in the renewable energy space, we have two gentlemen, Probal Sen, the energy analyst at ICICI Securities, and Jyoti Gulia, the founder and CEO at JMK Research. Jyoti and Probal, thanks for joining in. Probal, let me start with you. A major portion of this capex has been planned towards the renewable energy sector, we understand. But can you help us with the numbers? What do you think 2023 could look like in terms of private capex towards the sector? And what are the big triggers for the year?
Honestly, we don't look at renewable energy specifically, except to the extent that it impacts, let's say, Adani Gas or Reliance. So we know that Reliance has announced a few years earlier a 70,000 crore capex plan, which now seems to be getting upgraded if you take into account the kind of acquisitions that are being made and the ambitions that keep growing. Very clearly, I think anywhere between 70 to 80,000 crore of capex will be spent by Reliance alone. Adani has announced an even more ambitious plan. They have, I think, announced something in upwards of around $10 billion, $10 to $20 billion actually, in the next few years in terms of the green energy space. Very clearly, I think, in terms of overall energy capex, including oil and gas and renewables will probably far outpace traditional fossil fuel or even downstream investment in India, as is the case probably in most of the other developed countries over the next decade. So I think that momentum, will continue to shift. Even traditional energy companies like, IOCL or some of the other government PSUs have announced that they would be ramping up their presence in the hydrogen segment or in terms of building up their solar portfolio. Even GAIL has talked about building up their renewable energy portfolio in a more meaningful way. So I think in terms of the overall capex, I would say that renewables will probably continue to have a lion's share, but very difficult to state, exact specific numbers. I don't have the exact data with me at this point of time.
You have a point there, Probal, when you're speaking about a lion's share coming in from renewables, etc. And you did speak about a lot of announcements made by large players as well. But just to take that point a little further, NTPC is exploring green methanol production. Is it easy for traditional hydrocarbon companies like ONGC, Oil India? Has the transition rate out there slowed down? And what happens to the multiples of businesses like IOCL, BPCL, HPCL? I mean, I'm speaking purely from an investor standpoint. Companies which get into renewable space, do they get a higher valuation multiple? How do you play this theme from an investment standpoint?
That's the idea for sure, that the renewable business can create an inflection point with an additional investment coming in. It can create a very different return profile if you can actually get it right. You very correctly mentioned that the execution of these projects, the adoption of these new technologies, and the ability to blend them with a traditional fossil fuel business, which isn't really going away anytime soon. The fact of the matter is that even the most ambitious plans, let's say for Reliance, would be that renewable energy becomes about 10 to 15%. 10 to 15% of the overall consolidated EBITDA, and this is not their number, this is our sense in terms of, looking at the investment and the kind of growth that can happen. So from a transition perspective, I think very clearly renewables, because if you can get it right, it's a cleaner business. It sort of leads to it takes you away from the traditional polluting fossil fuel business mix. Obviously, the multiples will be of a very different nature than the typical 6 to 7 times or a 5 to 7 times multiple that a traditional downstream energy business will get. So that is very clearly, I think, the ambition, not just from an ESG perspective, but from a valuation perspective. Moving to a cleaner fuel regime would definitely improve the return profiles and therefore the multiple profiles for most of these businesses.
Got that. Jyoti Gulia, who's the founder and CEO of JMK Research, also joins in. Jyoti, what do you think the focus area would be this year in renewable energy? Will it be solar, wind, hydro? And what are the numbers that we're looking at?
So definitely the focus will be on solar and the battery storage. There are two majors, PLI scheme has been announced by government last year, as part of which Reliance is one of the beneficiaries in both the schemes, one for the solar manufacturing, another for ACC battery storage, advanced cell chemical industries that are there. So definitely the focus, the immediate focus is solar, and we are seeing in the market, even the government has announced, its target of 450 gigawatt of capacity, non-fossil fuel capacity by 2030. And to reach to that capacity, every year we need almost, 30 to 35 gigawatt of new capacity addition in this sector, in solar and wind. So there is one trend that we are seeing in the market is definitely, the market is shifting from plain vanilla solar and wind technology to pure play, round the table. So the end utilities, the DISCOMs, are demanding firm power, and because of which even the government entities are issuing tenders, which are round the clock tenders that are there, where the CUF availability is asked, to be around 70 to 80% of it. So yes, definitely, I can see, given the annual demand of 30 to 35 gigawatt solar and round the clock power, if you merge it with thermal or with pumped hydro storage or with battery storage, that will be game changer.
Everyone's talking about green hydrogen being a game changer and one of the energy sources for the future as well, Jyoti. So currently it's around 10 rupees per kg if I get my numbers here. And do we have the capabilities to bring it down to say 1 to 2 rupees per kg? I mean, same is the case for other renewable energies sources as well, because it's good so long as it's affordable. That's the view.
That's true, but I think there is still time for that. It will take another 4 to 5 years for green hydrogen to start making economic sense, and the company in focus, Reliance, is actually in right direction. It is, growing inorganically through acquisitions and also acquiring stakes in the companies wherein it can leverage its technology expertise also. So if, it is also setting up vertically integrated facilities to bring down its costs. So eventually, yes, 4 to 5 years down the line, we can look at these numbers, but right now the cost economics are not making sense for green hydrogen. Solar is still go-to source in terms of cost economics at present.
Okay, all right. Well, thanks a lot, Jyoti, as well as Probal, for joining in to this discussion and in the renewable energy space and the big triggers to watch. Thanks for being with us on the channel. But for now, don't lose sight of what's happening in the market.